Friday afternoon member connect session. We are actually doing these sessions with community leaders less frequently and shifting our focus to Wednesdays for our Back to Business series, where we're focusing on tools. But we are so excited to have Kenneth Shiver with Georgia Power with us here today to share a little bit about what's happening in our West Georgia economy. For those of you that were here back in the Great Recession in the 2007, 8, 9 timeframe, Coweta actually fared better than most other communities. We took a hit in the housing market because of foreclosures, but other than that, we didn't really take the kind of hit that a lot of communities did. And so I think we were talking about this in one of our committee meetings yesterday. It's partly our community leadership infrastructure that has served us well, and then just we live in a great community and people support it. So it'll be interesting to see what Kenneth has to say. I was sharing with him before the phone call started that we had looked at some ARC data earlier this week and last week at a board meeting, and by the way, most of you should have received that in your email, but it's very interesting if you look at page 6, the sales tax data for Coweta from March of last year till March of this year is about 9 to 9.5% higher increase, and when you look at that compared to the other of the metro communities, a lot of them are in the double digit on the negative side. So we're a little perplexed by that. I asked Kenneth, can you tell us what that means? And he chuckled. So we'll see. But before I transition to Susan, who's going to just remind everybody of the rules of the game, talk about the taping that's available afterwards, and introduce Kenneth, I wanted to say thank you to the lovely Craig Ogletree, who is sitting in with us from Georgia Power. He's our area manager and also sits on the chamber board. And he was responsible for scheduling Kenneth with us today. And we are very grateful for that. Craig, thank you very much. So Susan, I'm going to turn it over to you now.
Okay, so hi, I'm Susan Kraut with the Newnan-Coweta Chamber, and it is my great pleasure today to introduce everybody to Kenneth Shiver. Kenneth is the Chief Economist and Director of Planning and Regulatory Support for Southern Company. As the Chief Economist leading the demand side planning functions of Southern Company, Mr. Shiver represents the company as a witness in its regulatory filings and engages with the industry on current issues related to electrification, electric transportation, pricing, energy efficiency, and utility planning. Currently, he is serving as a commissioner on the Alliance to Save Energy's 50 by 50 Transportation Commission and the Board of Electric Drive Transportation Association. He has over 25 years of experience in the planning and analysis functions of Southern Company and has degrees in economics from the University of West Georgia and Georgia State University. Without further ado, I do want to tell you one more thing, I'm sorry. As Mr. Shiver makes his way through his economic explanation and sharing with us what it is that he knows about the economy in this current environment, I do want to offer everybody the opportunity to ask questions. You'll see a chat bubble at the bottom of your screen. Just click on that, type whatever it is you want to know, and we'll do our best to get it answered, if not now, after the call. And then keep an eye on your email inbox. Every Monday, these calls go out as part of our Connecting Points emails. You can email me at susan@newnan-cowetachamber.org if you don't believe you're on that list and you want to receive these. Otherwise, keep tabs on social media. So all of that being said, Kenneth, you have the floor.
All right. Thank you very much, Susan. And Candace, thank you as well. Very happy to join y'all today. As Susan mentioned in my bio, I'm actually kind of from the West Georgia area. I grew up down in LaGrange, born down in Warm Springs, Manchester, and live in Carrollton still today. So Newnan is somewhere I actually get to visit periodically. I've heard a rumor Dr. Joey Smith might be on the call from the University of West Georgia. He and I went to graduate school and undergraduate together. So the West Georgia area, I'm very happy to be able to talk with y'all today. It's not only an area that I'm very interested in, it's also where I live. So I'm awfully glad to be able to help out and share what insights we have. One of the things in the bio didn't get mentioned, and I'm going to highlight today. Matter of fact, go ahead and hit that second slide there real quick, Susan. I have to do this. The lawyers get mad at me if I don't at least highlight this second slide. There's one slide I'm going to share today from our earnings call. One of the things I get involved in every quarter is actually, for Southern Company, keeping up with what's going on in the economy. And you might kind of go with an electric utility. So, yeah, I know you care about the economy. Why do you care about the economy? What we've really found over the years and how we forecast how much electricity everybody uses is what's going on in the economy. But one of the things, and I've worked with Dr. Smith a little bit about West Georgia on this too, is we turn that around. And some of that I'm going to share today is some of the insights we see in what's going on with electricity usage gives us a really real-time insight. Just as Candace mentioned about sales tax, which is a real good quick indicator, there's not a lot of quick indicators, especially in the environment that we're in right now, because we are dealing with something that has happened very, very quickly. So all this is saying right here is I've got a slide from our earnings call deck back in April, and anything I say today is somewhere talked about in some form or fashion in our 10K, 10Q, and you can find that on our investor relations site at southerncompany.com. So lawyers should be happy now. Let's go ahead and go to the next slide, and we'll get into the meat of the presentation. So when all this started happening, so March 12th was our last day in the office. I made the fatal flaw mistake of deciding to run by Sam's Club on the way home. And when I got in there, realized it was like every line was open in Sam's Club, and lines were 10 deep. People were buying freezers. People were buying carts of meat. And all I wanted was a case of water. But it was interesting to watch and look at. The sales deck data Candace mentioned, I have a feeling, and it's just interesting if you look at the different areas. Newnan is definitely an area where you've got some of those big wholesale clubs. And, you know, this is what's been going on with this recession. There are some winners and losers. And right now, the stores that are able to stay open, as we've talked to them, some of the big box stores and all, especially, that were open when the shelter-in-place orders are going on, they are actually using more electricity, and I suspect we're basically ringing the cash register more, especially during March. I think from our data, it looks like it probably slowed down a little bit in April. But a lot of the things that are going on, a lot of things moving very differently, and your sales tax data points to that. But overall, besides what we got in March, things with the shelter in place have definitely put a downward push on the economy. And it's the one thing that everybody agrees on. Second quarter of this year is just going to look ugly. There's just no other way about it. Basically, on an annualized basis, economic activity measured by GDP, or gross domestic product, is expected to decline somewhere. I've seen numbers running from 25 to 40. I think some people are even getting up to 50% now on an annualized basis. Let's put that in perspective. In the Great Depression, 1930s here, we contracted the economy 30% over 43 months. On an annualized basis, we're going to contract the economy as much or more in one quarter. That is just unprecedented. It is nothing that we have ever experienced before. And so I'll just say that's where everybody's in agreement. Where people are sort of wringing their hands and debating about where we're going is when we get beyond this. Once the shelter-in-place orders start lifting, where do we go from here? And at Southern Company, what we've done, we work with a vendor, IHS Market. We get stuff from. We also talk to a whole bunch of other folks, talk to a lot of our customers through the Edison Electric Institute, EEI, and talk to all of our key account and national account customers and try to synthesize everything we're getting into one picture. And the picture we really started putting together late March, early April is basically coming out of second quarter, there's probably three different paths that we could be on. It could be a short-lived recession, which is the green chart that you see, green line that you see here. There could be more of a U-shaped recession with a little more elongated recovery cycle, the blue line, or we could be in an unprecedented downturn, which is the red line there. Whether we're on each of those lines basically depends on three things, and this is the three things we're really keeping an eye on and, you know, thinking about a lot. The first one is basically what's the spread of the virus and how well do we keep it under control and how long do we have to keep the shelter-in-place orders in place. The second one is what's the effectiveness of fiscal and monetary policy. And the third one is basically I turn around, I look at all of y'all and tell you to look left and look right and say, what are you doing different? What are you going to do different as a business, as a consumer? Because that is the wild card that we're dealing with on all this. How much confidence people have coming out of this in the back end, how much do people change their behavior, are all things that are going to affect whether or not we're on that green line, blue line, and I think we'll stay away from the red line, but those are other questions. So let's talk about each of those in a little bit more detail. Where are we at on the virus? Basically, our blue line case assumed that basically by midsummer, you would have everybody kind of getting back to normal, the shelter-in-place orders would go away, the virus would be under control. The short-lived recession case, the green line, assumed basically by end of May. Well, we passed the end of May, and I think we still have the virus. Matter of fact, I was seeing headlines today talking about other states are having flare-ups. Georgia seems to be more under control, but it's still rumbling out there in the distance like a distant thunderstorm. But basically, from that metric right now, we appear to be firmly on the blue case, and with basically where we're at on controlling the virus and where we're at on people basically staying social distancing. So that's where we're at on that one right now. We're watching that very closely. I get a lot of questions about if we have a rebound. And a lot of this probably, I would say, if you get into a rebound, you're definitely on the blue case, and you probably start winding up being somewhere between the blue and the red case. Because a rebound would effectively keep things depressed for a longer period of time. So that's where we're at on number one. So where are we at on number two? Fiscal and monetary policy. One of the things you have to kind of realize that in 2008 and 2009, it took the federal government 11 months to pass their first fiscal stimulus program in October 2008. This time, we have passed the historically largest stimulus program ever, probably in the same, well, not even probably, that got declared this week, in the same month where economic activity started to decline, March. That's unprecedented, and the amount of it's unprecedented, and it's big enough to really get us to the other side. The question mark is, did it get to the right place? How do people take the money? What do they do with the money? From a monetary standpoint, we assured liquidity. We kept markets functioning. We basically have done, in some respects, I would say right now, from a fiscal monetary policy standpoint, we're on the green line. There are problems. The Paycheck Protection Program did not get to all the right people. There are some other frictions in there in terms of how some of the incentives were staggered. But, you have to contrast that with, this is a very unique recession. Most recessions, you have some kind of imbalance out there. 2008, 2009, housing market imbalance. 2001, the tech bubble was bursting. 1991, you're kind of in malaise, but largely you had the Iraq War, which spiked oil prices, drove you into a recession. This is the third of recession where it's a policy-driven recession. The first is 1937, when the federal government felt like the economy was growing too strong and put on the brakes and drove the economy into a recession within the Great Depression. The second is 1980, when Paul Volcker raised interest rates to double digits and to starve inflation out of the economy. And now we basically voluntarily shut the economy down to prevent the spread of the virus. The good news about that is when you remove the policy restriction, you have the opportunity to go back to normal. The question mark is, were you able to hold your breath for that period of time? Right now, the fiscal and monetary policy was big enough, it was quick enough, may not have quite gotten to all the right places, but it's basically gave us the opportunity to get to the other side of this and have a pretty quick recovery. And we saw a little bit of that evidence in the May employment report, and I'll talk more about that in a second. But the real question we're getting into is, okay, we know where the virus is at. We know what fiscal and monetary policy did. We were able to pay our employees, or our employees were taken care of by unemployment insurance. is basically, how are we going to change our behavior? When the stores open back up, are people going to feel confident in going back to their stores? Businesses, are you going to basically continue working the way they were? And this is what's been fascinating as I've talked to folks. There was a great article a couple of weeks ago. The Wall Street Journal interviewed the CEO of Tractor Supply, and he basically said every trend in retail just got accelerated by 2 to 3 years. And I found it fascinating. You go to Target and just talking to them, asking them, say, hey, so what's business going on here? And they're like, well, pretty dead in here, but these people keep coming up and they're doing the digital equivalent of pressing their horn and doing their online orders, and we carry it out to them. So we're spending all our time running around the store filling up baskets to take it to people out front. And people like that. We are training people how to shop differently. And if that continues, it's going to put more downward pressure, especially on those big box stores that may have had a boost early on in this, but may longer term find out that they look more like warehouse clubs. Other things that, we're getting early symptoms of things changing. We're already seeing a lot of the retail was not healthy, and this is one of the things I tell folks. Recessions accelerate trends that were already there. Retail was already weak. It probably made it that much weaker, and we'll probably see more retail stores going away because of this. It was a great stat I saw Bank of America had, but online sales have been growing at somewhere in the 8 to 10% range per year for the past 10 years. The month of March, they grew 27%. Now, y'all may have gotten the counter of that because you had enough of a retail base in Coweta County, but overall the trend is to retail and then having more specialty stuff locally, which I'll say is the nice thing about the Newnan-Coweta area. And my wife and I come down there periodically to go to some more of the specialty shops and those kind of things. Those are the things that seem to be, trend-wise going on out there. We were just talking about at the beginning of this. We're doing a Zoom call. We're doing this remotely. How much travel are we going to do? How much are businesses, they tighten it up going, hey, you did that remotely for 6 months. Why can't you do that meeting remotely now? Why do you need to go see that person? Or do we going to consume things live, or do we consume things via video? Just a whole host of things. And it's some of the things we're starting to spend our time looking at what's going to change. But things are, I expect, going to change. And I would tell you, the longer the economy is disrupted, the more things are going to change. And that's the big thing we're trying to kind of look at. So right now, we basically feel like we're probably on that blue path, maybe a little on the green. I was kind of encouraged by the May employment report. But basically right now, it's looking like the economy is going to contract somewhere between 5 and 7% this year. And in 2008 and 9, that's how much the economy contracted then. So, and it's a pretty broad-based thing, retail. And the other is one of the big areas getting hit, restaurants, of course. The other big difference here, though, of the 2008-9 recession is we went into this with housing being pretty much imbalanced. And I bet in Georgia, probably a little short on housing. Autos are like average age is 12 years. So you've got a lot of things that are kind of like, okay, if we get out of this and I've got a job and I've got some savings, I might be able to get back to normal because I'm going to need to do some things. But it's going to come down to, at the end of the day, in my mind, confidence. Do people have the confidence to renew their purchasing, renew their economic activity, or do they hold out and wait it out with the uncertainty out there we've got? But you have to remember, we don't have just this uncertainty. The oil market stuff is great, especially great for a county like Coweta with low gas prices. But for certain parts of our country that have more oil dependence, like Texas, Pennsylvania, North and South Dakota, that's a big shock going on in the economy. Our trade war with China is still bubbling out there. Matter of fact, it's turning more and more into a Cold War. There are other disruptions that we've got going on beyond just COVID that are kind of creating uncertainty for business investment. Now, the rest of the slides I've got a quick. I'm going to stop there, Susan, just real quick to say if anybody sent you any questions or anything I need to address before I go to the next slide.
I have a question for you, Kenneth.
Okay.
So in the West Georgia region specifically, one of the things that I recently read, going back to, you had mentioned the employment numbers and, to flip that, the unemployment numbers. The most recent total for new unemployment claims for our region was 81,957, which represented an increase of 8,384.2% over April of 2019. If that trend, and then I saw that Georgia has recently extended for another 13 weeks as part of their unemployment claims process. So my question to you is, if that trend persists, is that one of those key factors that's going to keep us between the red and the blue? And how many, is it meeting all of the requirements, so to speak, to hit that particular category, whether it's the U-shaped recession or the unprecedented downturn? Mm-hmm. Do we meet some of those conditions, or do all of those conditions need to be met? Does that make sense?
I think, yeah, it does make some sense. I'm going to get you to drop down 2 slides, and then we'll go back a slide here.
Okay, go down 2.
Yeah, go right there. Yeah, so this is initial and continuing unemployment claims. This is one of the indicators, and I would tell you, whenever you get to recession, initial unemployment claims is a really good real-time indicator of what's going on in the economy. We have it here both nationally and for the state of Georgia and state of Alabama. A couple of things, just to kind of put some historical notes. People noticing, prior to this recession, the highest weekly total of claims was 800,000 nationally. We've basically been hitting 6 and 7 million claims during this recession. This unprecedented, the speed of what's happened with this downturn is just off the charts. But one of the ways we're kind of measuring this, so the initial claims are important, but what I'm really drawing people's attention to now is what's going on with continuing claims. And that's the area chart in the background on both of these graphs. And these are the number of people that are continuing to receive benefits. So this gets into your 13-week part of your question there. And what we saw is back in about mid-May, maybe a little earlier than that, Georgia was about a week earlier than that, continuing claims peaked and it's starting to come back down. And the way we interpret that is that basically the peak of economic impact, the contraction of the economy, probably slowed at that point in time, and the momentum began to shift. Now, we still are missing 18 million jobs that we had a year ago nationally, and really just even 6 months ago that we had. But the economic impact appears to be starting to lessen a little bit. So to your question, where are we at? Basically, I would tell you right now, this movement we're getting right now is pretty consistent with blue or green, or an even red case we had out there. Probably more with the blue and green, though. We seem to be staying away from the red case. But what we're really trying to watch is those continuing claims start to coming down. That is a really good indicator that the economy is really starting to recover. And I would say right now the numbers, we're definitely moving the right direction. That chart I showed a minute ago just was as of this Thursday. But it's still way up there. There's still a huge amount of negative economic impact in the economy. So right now I'd say we're still blue-green, probably more blue really. But if that continues to improve, we'll stay on that blue path. The May employment report, and I should have put a graph in here on this, I had one, was really encouraging. And I'll just say, this is what confused everybody. There are so many economic statistics out there. So initial claims are basically, it's really how many people file for unemployment insurance. There are 2 other employment surveys that come out the first Friday of every month. One is the establishment survey, which is basically they do a sampling of the establishments that file into the unemployment insurance program. And that's where we get our employment gain number. That's where we got the 2.5 million additional jobs being added. And then there's the household survey, where they literally kind of knock on people's door and say, are you employed? Okay, you're not employed. Are you looking for work? And or are you working, but you're not working as much as you'd like to work? So that's the household survey. That's where we get our unemployment rate from. Both of those came out last Friday, and they basically said rather than having the economy contract in double-digit jobs for the month of May, we actually added back 2.5 million jobs. And unemployment rate fell from, I forget from what, down to about 13.7%. Some debate about that 13% number. Maybe it should have been more like 16%. But the bottom line, both reports reported that the economy appears to have done what the initial claims data said. We basically bounced off the bottom, and the economy, the momentum of the economy seemed to have shifted more to early recovery stage. The question mark is, I go back to how much, where do people do? Do people have the confidence? I heard a great description the other day that you had to sort of flip this around. Is that this will be the square root of symbol economy. If you remember that from your high school math days, kind of a straight line, drops down really sharp and then pops back up, but not quite all the way. I have a feeling that's where we're kind of going as an economy. We're going to bounce off the bottom pretty sharply, especially the service sector workers, which is really easy to kind of restart a service sector business versus a manufacturing business. Comes back, but then you're still dealing with air travel. And I talked to another chamber where like 6,000 of their residents all work at the airport. And most people are saying we're not going to get back to pre-COVID travel levels till 2.5 years later. That's what happened after 9/11. So we've got large parts of the service sector economy that may be missing for a while, but there's large parts of it that we're seeing that are popping back. So it says I gave you a long answer to your question, but kind of tied into several other things there I was going to talk about. That kind of get to your question, though?
You did, thank you. And sorry to preempt slide 5.
No, it's fine. That's always the danger of asking for questions early.
It is.
Jump back to that other slide in there, right after this slide here. Let's see. Yes, that one. So I'll talk a little more about this. This is what we actually showed our the investment community, Wall Street, at the end of April. One of the things that we started doing, as I mentioned earlier, electricity usage is a really good indicator of what's going on with economic activity. And so we actually built a model based on daily electricity usage in the Southeast, essentially what we call our control area. These are all the area by which we manage the flow of electricity. And we basically built a model that was a pre-pandemic model, and then we were giving actual weather conditions, actual day of the week, and then comparing that to actual conditions. And what we sort of saw is the economic impact, at least from an electricity standpoint, if you're using this metric, started the week of May 20th, increased up until about April 17th. Had a little recovery in April, but really probably more when looking at the data, we had a little bit more of a further impact in early May. But about the second week of May, we saw electricity usage starting to rebound, and it's been recovering ever since. And you can see the picture when you look at restaurants. Restaurants, basically their usage dropped, and then it hit a peak drop about mid-April. And then as they figured out how to do takeout service and began to open up a little bit, their electricity usage began to increase, and we've seen them, they're still below, I think about 10 to 12% below their pre-pandemic levels, but they are significantly improved from what they were. Similar picture with retail, still down below, but that same picture of recovery going. So we feel pretty confident right now that the peak economic impact, the second week of May, but the question mark is how far can we keep recovering over the next couple of months? And that's going to, like I said, I go back to my thing, spread and containment of the virus, continued fiscal, monetary, and fiscal support, and then just how do people feel, how the confident they feel, and they start doing things different is where we keep coming back to just over and over again. The last picture here, I'll just sort of hit on this slide here, and then we'll wrap it up for other questions, is what we basically told Wall Street, what we thought we'd see in residential sales. One of the interesting things is, and again, this gets a little bit back to Candace's comment earlier about sales tax. We saw residential electricity usage jump up in the months of April and March. People staying at home, electricity usage goes up, and so they were probably staying more at home and shopping more in the local communities during the months of March and April. But once things started releasing, when we got to May, whether they had a job to go to or not, it appears they started getting out of the house a whole lot more. But we're kind of expecting residential usage to probably be up this year a little bit. Commercial and industrial be down, though I think as we're looking at it more, that might flip-flop, that industrial might be down a little bit more than commercial. But overall, seeing electricity usage decline about 5%, which is about the same amount of contraction we saw in the 2008 and 9 recession, which kind of points to a similar economic drop on an annual basis that we saw in 2008 and 9, just a much more sharp drop and shape to it than we saw in 2008 and 9, and different industries, of course, being impacted. For example, in 2008 and 9, electricity usage in the commercial sector, which is things like hospitals, office buildings, retail, only dropped 1%. And here we've been seeing, you can see we're looking at an annual basis, but in the on a monthly basis, we saw electricity usage in March, or April being down 15 to 20%. Just unprecedented movements in business activity and things that we're all scrambling to figure out how to do and dealing with new problems. And I'll kind of wrap up with this. I was on a couple of calls with EEI with customers that were just deemed essential and customers that were deemed non-essential. And it was interesting the problems each of the stores are dealing with. I mean, those that were open were dealing with supply chain problems and dealing with how do they keep their store clean, how do they manage the flow of people in the stores. Those that were closed were all of a sudden realizing, well, how much can I set back my air conditioning units? How much more can I economize in my store? Wait a minute, I'm used to having somebody in my store 24/7, or at least every day somebody's in the store. And if there's a roof leak, I've got somebody there to watch for it. I don't have that same just natural monitoring of my store. So a lot of this change going on out there that nobody at the beginning of this year planned on or even contemplated, but it's all of a sudden causing us to really think about what do I need to do potentially maybe be more resilient in my business, but also for my customers. And how that all plays out at the end of the day, we believe will determine the shape and speed at which we actually recover on the back end of this. But overall, it looks like 2020 will be a very down economic year, but hopefully starting to recover now until the end of the year. The question mark right now is still open in our minds is how fast. Susan, I'll stop there and see if there's any other questions.
I don't see any questions posted, but of course, I have another question.
All right.
So, Ken, I'm an inquisitive one. So, I like what you said, and I subscribe to it myself in many respects. Recessions expedite trends that were usually already there, or lingering in the background somewhere. So, obviously we've seen a significant shift to e-commerce. People who maybe were already using, I'm not just talking about your Amazons or your online retail purchases, but I'm talking about even shifting to the home delivery of groceries and the market increase in your Uber Eats and your Postmates and all of those sorts of organizations or consumer services, if you will. So, taking what you said and looking at what that trend is, I would venture to say that people who were not as comfortable with these online options or these virtual options are starting to get their feet wet, sink their teeth in. Do you see this trend persisting, or will people revert back to their old habits, do you think, once there's a higher level of confidence? Do you see this persisting?
Well, I definitely think there'll be some going back, but I think the flip side of it is it's just so much easier. And I've seen various surveys on this. People like this. Now, I say that. They also like, I think, for more specialty items, still getting out and seeing things. But two different perspectives here. One of the calls I was on with one business, and they were about a week and a half into their planning for the pandemic and what they were going to do about closing their stores. And all of a sudden it hit them about a week and a half in. We don't have an e-commerce presence. And without an e-commerce presence, we have no revenue coming in the door as long as our stores are closed. That had never hit their planning process ever. And so I think just from a resilience standpoint, you're going to see a lot more stores making sure they can keep doing business. And this is one place I kind of go back to. I've been so impressed with the local businesses. Now, my sampling is in more the Carrollton market, but local restaurants that are using social media to advertise that they're open for takeout and how to come do business with them and making it easy for people to know how to do business with them. And, you know, this is a bit of informal surveying, but just I'm getting more and more people going like, gee, we really like that. We like keeping up with, you know, Jimmy's Place or the corner cafe. You know, it seems to be building some loyalty, and I think that's one of the things you're able to do pretty cheaply with those environments. So I think you will see the trend continue, but I think it'll morph and change. I think the other one we were seeing this again a little bit pre COVID. Several of the large box stores, especially the really big guys, have figured out, okay, the way to compete with Amazon is not to get rid of our brick and mortar stores, but figure out how to use our brick and mortar stores for delivery. So this kind of gets into, it's not Grubhub, but some of the big box stores are using some local delivery services now. We see, and you mentioned in my bio, you started stuff in electric transportation. One of the things that we're kind of getting from some of those large customers is they really expect that the trend to be happening, but they want to figure out how to deliver those goods and services in a clean manner. And so they're looking at electric transportation options to figure out how do they get stuff and essentially treat their stores more like a warehouse. Some of y'all on the call may be old enough to remember, and I always laugh when I think about when I talk about this. It reminds me of the old service merchandise model. If you remember that, and basically you went into service merchandise, you looked at everything, you wrote what you wanted to get down on a pad of paper, and you took it to the register, and they rang you up, and it came out on a conveyor belt in the back end. More and more, and I've seen this a lot, especially you get some markets, how much are you doing that going forward, of going into a store that's nothing more than a showroom to look at, touch, and feel what you want to see, but it's being shipped to you from another location? I really think that's the trend. The model seems to be working, and the economics of it, and that's usually what drives things today, seem to really be pushing there. Plus, consumers like it.
Okay, thank you. Thank you for that. And I mean, you know, similar to Carrollton, you know, we have a lot of boutique stores, you know, mom and pops, as they call them, which I think that term's a little antiquated, but sole proprietorships, right? Not franchises.
Correct.
And, you know, obviously a resident, and I'm sure everyone on this call would agree, seeing to their solvency. I mean, you know, just imagine on a beautiful Friday evening here in Newnan to not be able to take a walk downtown, and I see Phyllis on this call, go get my coffee toffee from Let Them Eat Toffee, and have to instead order my coffee toffee and wait for it. It just takes away from that ambiance, you know, that special nature of it. So,
well,
go ahead.
I was going to say, to your point on that, I mean, our last day out, March 13th, we went actually to a gallery show down in downtown Newnan at the Boyd Gallery. And, you know, we love that. That's the kind of stuff we love. And I think more and more, that's the successful model. I think the challenge for the local chambers, especially in this environment, is how do I help businesses like that, especially that don't have a big corporate balance sheet behind them, make it through these things that they don't have to deal with or have people to deal with on a regular basis. How can I provide those resources? And I think that's been a big thing. And quite as I talk to some chambers, I think that's where they've been really helpful to their community, is helping them figure out how to navigate some waters they definitely don't see every day.
All right. Well, thank you. Thank you for that. And, you know, if you're amenable, we look forward to touching base with you in another month or so and see how things have changed, if things have changed, and what things might look like going into the fall. Candace, do you have anything you'd like to?
So I would just say, our task force committees, the Resiliency and Recovery Task Force. There's 5. If you haven't signed up for one, we'd love to have you participate. 4 of them have met for the first time this week. And it was interesting, in the Small Business Committee, there were a couple of people there that were still looking for help with their PPP program. And so we've got a couple of bankers that can help with that. And in the Resiliency Committee meeting, they were talking about a little bit about what Kenneth was sharing, that, you know, the model for business has shifted, and it's probably not going to go back to the model that we've all been used to for a variety of reasons, not just these virtual efficiencies, but also you know, the things that you do, the protocols when you go visit a business. But we're a great community, and you know, we as a chamber want to continue to hear from everybody. If there's a need that you have or an area where we can help you with, we want to do that. Next week, we actually have a specialist attorney on the legal side of COVID, who's going to talk about liability waivers and other HR issues. So if that is something you're concerned with, this is the attorney that the Georgia Chamber has recommended that we connect with, that has the expertise in these types of issues. So I think, Susan, it's Wednesday at 3 of next week, right? Yeah. But Kenneth, I wanted to say thank you. I can't recall if you touched on unemployment numbers, percentages. I don't think you did. Did you?
I did not, other than the fact that probably the national numbers were understated, which probably is the same thing for the state numbers right now. A lot of people that were furloughed were saying, well, I'm still employed, or and they, the way the question is asked, they should have reported if they were unemployed. But the numbers are large. It's kind of the way I'm looking at it right now. And I think over the next couple of months, we'll start getting a better handle on what it truly is. Unemployment's a lagging indicator.
So we were talking about it at the, it was the regulatory meeting yesterday, and I think the state or the national maybe is 13, 14, 15%, but the general consensus, and it's probably, I don't know what it's based on, Craig, you were there, was that the Coweta unemployment numbers are probably about 8 to 9%, was what folks felt like that it was. So if that's true, then that, you know, we're trending in the right direction. But Kenneth, it's nice to know that you're a South Sider like the rest of us, because this is God's country, and we're happy to have you in our neighborhood. And of course, you know, you haven't moved to the best county yet, and maybe one day you'll wake up and you'll do that. But Carrollton's a pretty darn good place.
Yeah, we're all glad to be in West Georgia together. So, but anything I can do for y'all going forward, please holler. And thank y'all very much for the opportunity to come talk with y'all today.
Thank you for taking the time. Susan, I'll toss it back to you if you have any announcements.
No, I do not. You covered everything that is relevant at this moment. So again, just to reiterate, if you missed a part of this or you want to listen a little bit closer, we will distribute the link to the video and or the audio. So keep your eyes out for that, and then stay tuned, because we will have lots more updates in the coming weeks. And Kenneth, thank you so much for your time today.
Thank you. You guys have a great weekend.
Thank you, guys. Thank you, Ken.
All right. Bye-bye.
Thank y'all. See y'all later.